here today. We see a lot of opportunity there that if we bring corporate banking, treasury, the investment banking arm I spoke about, and then commercial banking together, we can approach the market in a more profitable way than we had done in the past. And so that org chart has been adopted and we are working with it. The next thing is that we've hired all the key stakeholders that we identified to help execute the strategy. That's the more reason why my colleague, Mr. Kofi, who is our Chief Digital Officer, is here. It's not for any reason, it is mainly for the purpose of executing the strategy. So we have head of Executive Director, Wholesale and Investment Banking in place. We have Chief Digital Officer also in place. We've hired somebody purposely for transaction banking because that is where the meat is. And so you see that so far, all that I've said is to confirm that we believe in what we are doing. We are not unaware of the challenges that are presented by the global economy and the macroeconomy of Ghana. But in all that, we've situated the bank in the right frame to be able to deliver going forward. Yes, a bit of the macro. I want to focus a lot more on the forward-looking side because the history is history. Whatever happened, we've seen it already. But what today's situation presents and how it's going to impact us for the future is what I'll spend some time on. We've heard a lot of commentaries about why we are where we are. In my view, issues have started way before 2022 began. And why do I say that? Those of us who follow the financial news, you might have heard of Evergrande of China. That was the first sign of challenges on the horizon when they defaulted on their bond repayment. So the idea was that it was going to have a contagion effect on most economies, first China and emerging economies. That is one point. Another point is also that because of COVID, most governments globally brought on board relief measures for their citizens for good reason. In that process, we saw a lot of liquidity being pumped into economies. All of this led to increasing purchasing power. Increasing purchasing power without a commensurate productive capacity. We also knew that COVID also presented supply chain challenges. I know of situations where freight, in particular, saw more than 500% increase. And so those supply chain challenges, the COVID relief measures, in fact, there was a time there was shortage in semiconductors. Even to today, that situation has not improved. And so things were building up. And then suddenly we saw advanced economies experiencing inflation rates, which had not been seen in more than 4 decades. So problems were coming. And all these developments, as the Western world sought to also rein in inflation, the idea was that they needed to stop their quantitative programs. So there was a need to mop up liquidity from the system. That meant they were going to increase their rates. And most foreign investors see emerging markets as high risk. They come to us when they think they can get enough returns better than what they will get in the advanced world and still be able to cover their risk. And so if sentiments are that rates on the other side are going to increase, then you tend to see investors shying away from our markets, what we call capital reversals. So these developments had happened somewhere September. And so for those of us who follow the bond market in Ghana, you saw that our rates were going up from that time. And then building on. So we're importing the inflation, 1. Oil price had gone up, 2. And because we import the oil and retail at the S-pump, we saw inflation also going up here. And then as the investors shied away from our markets, then suddenly we saw the cedi depreciating faster than we had seen the last 5 years. So these problems came together to make our situation more than worse. Other factor I need to talk about was the fact that the rating agencies thought our debt level was getting unsustainable. And so with the downgrade, that fueled this speculation of, no, things are going to get worse, and people trying to exit, to the extent that at some point in March, the yield on our Eurobond was 22%. That is unprecedented. So these are the challenges that we are confronted with going forward. Yes, a number of policy measures have been introduced on the side of the BOG in trying to curb the inflationary situation. They've increased the reserve requirement from the COVID level of 8 and then 10 for banks that had paid dividends now to 12%. What that has done immediately is that liquidity is being moved from the system. 2 was also the OLEM, other loans exceptionally mentioned, that BOG had dropped the provisioning from 10% to 5%, suddenly has been reversed. And then the additional capital buffer that they hived off 150 basis points has been restored. So capital adequacy must now be 13%. What do these measures mean for us as a bank? And so when I'm concluding, these are some of the measures I'll speak to you about and how the bank is going to react. So the current situation is that the economy is challenged. A number of measures have been introduced. We have also seen the side of the Minister of Finance, the best efforts being made to rein in the situation. But that is what we are confronted with. Already we've seen its impact on the first quarter. The subsequent quarters we are going to see. So that is where I will end on the macro, go on to the 2021 numbers, and then come back to tell you about how the bank is reacting to these number of challenges and opportunities they present to us. So in terms of deposits, we saw growth. We saw 16% growth in our deposits. And then these ones came mainly from all the things I've mentioned. New customers coming on board, enhancing our wallet share of existing customers. Our customers are multi-bank. But the thing is, if you improve your services, if you get closer to the customer, you get to know the customer more, then you tend to get more of the customer's business. Those things fed into the growth in our customer deposits. The good side is that the growth was also qualitative enough, which helped in our profitability. We grew our loans significantly. In the past, DCB had been attacked as not helping, but this time around, you can see that we did significant contribution by way of new loans that we brought on board. All of that, that put us at position number 1 in terms of total assets. And don't forget, this is quality growth. I've said that the growth was driven by the customer deposits, which was qualitative enough to help us be more profitable. And that resulted in us being position number 1 when it came to total assets. In terms of the mix of the assets, is it just that we are growing with PPE, property, plant, non-earning stuff? The answer is no. We actually increased earning assets, 81% of the total balance sheet size. And these are the reasons that contributed to the improved revenue performance, as we might have seen already. So I've said a lot. When it comes to operating income, DCB remains the number 1 bank. And going forward, that is the area we are going to enhance. With all the things I've mentioned, we saw significant growth in our operating income in excess of 20%, coming from new customers, new business, enhancing the wallet share of our existing customers, and being bullish in the loans and advances. Also, when you check on the profit before tax, we achieved that significantly because as we ramp up the revenue, yes, costs did go up, but we did everything to make sure cost growth was far lower than revenue growth. Already the revenue base is bigger and larger than the cost base. And so if you're able to grow the revenue a lot faster than you grow the cost, it tends to widen your jaw of profit. And that contributed to our growth in profit from 602 to 810 million. One key thing that I need to spend time on and talk to you about is impairment. You have seen that GCB had the highest rate of impairment in the industry. What we did as management was that we took a proactive decision. We have two key accounts that had challenges, mainly due to COVID. These are project finance facilities, one in the hospitality industry, one in the retail space. There were foreign partners working with us on the project. Because of the closure of the borders and COVID, travel delays and other related items, we couldn't go on the project as planned. By the time things eased that we had to go back, cost overruns and other related challenges had cropped up. So as a management, we took a proactive decision to say that we won't wait for things to get worse. Let's rather impair these facilities as we work with the promoters to bring the projects back online. So those two facilities mainly accounted for our NPLs and then the heavy impairment you saw. If you discounted those two facilities from our NPL, which was 16%, our NPL was just 3%. And so it is deliberate. Things are fully under control. When you see the figures, don't panic. We know what we are doing and that nothing will come to shock us. So on the whole, our income statement performance was great, and the challenge to us as management and the staff is how do we keep this going forward? And that is the assurance I'll give you at the end of my presentation. With all these things, you see that our capital remained very strong. We have solid capital base to do our business of banking. Again, the asset quality, I've spoken about it, I won't bore you. And I was very deliberate in bringing it up front because I know it's an area that you are worried about. But the good thing is that it's firmly under control. On our returns, we also saw improvement. But the most striking thing I want to avert your mind to is our cost-income ratio. My pointer doesn't reflect. So you've seen a consistent decline in the cost-income ratio. And this is the outcome of all the things I said earlier. And so as we deepen and we do more of those things I spoke about, God helping us as we execute, that is the future you see going forward. In terms of stock market indicators, I remember the MD asking us this morning, our P ratio, and that is good, it's a good stock. And my natural question was, then why are the investors not reacting in that way? Since we published those wonderful results, our share price has rather dropped from 5.24 to 5.16. And I've been wondering, what are the reasons behind this? Maybe as we interact, what the exchange is speaking, you can share with us. Media people, as you interact with people, what they say, for which reason, in spite of our wonderful performance, they are still not giving us that vote of confidence in ensuring that our share price goes up. Maybe in the course of the Q&A, we may get to know. But the fact remains that GCB is a very solid and strong bank. We have the right capital to do all the things we are saying we will do. And so, trust us. How do we compare? Here, in our ambition to dominate the market, what we sought to assess is that, is it coming in reality or is just a mirage. And so if you check from operating income, 2020, our market share was 13%. We've moved to 14%. When you check profit before tax, our market share 2020 was 10%. We've moved to 11%. And so all the indicators are pointing in the right direction. And that leads me to the question, why are we not seeing that reflect in our stock price? And so everything I've said so far points to the fact that the strategy is very much on course, and our promise to deliver, we stand by it. We are very much aware of the challenges that we are confronted with. But the good thing is that because it's not lost on us, in our planning, in our execution, all these things are taken into account to see how best we can return the best value to our shareholders and other stakeholders. So given the macro background I said in terms of the forward-looking, the policy measure of the cash reserve ratio increasing has brought some liquidity squeeze on all banks, including GCB. It's a matter of fact. The policy rate hike is also leading to increase in cost of funding. Today, interbank is 16.9. When interbank, some 2 months ago, we were talking about 30. And so on a day, if a bank is hard pressed, you need to go to the interbank market to square up your position. You will pay additional 300 basis or almost 400 from what it was in February. That is not lost on us. Because of the depreciation of the CD2, some of our foreign partners who are vendors, their contracts are in USD. And so without any price escalation, because our operating currency is CD, something you are paying $1 for in December 2021. Today, that $1, instead of maybe 6 cedis, is now 7.5. And so that generates cost escalation for us. And all your local partners you are working with, because of what is going on, they also come at you to say that, guys, we cannot continue to provide the services. And so how much can you give me in terms of escalation? So all these things are leading to an increase in cost of operation. We are very much aware of that. On the flip side, if rates are going up, unfortunately, if you come to me for a loan, I will also have to increase the rate. The volatility in there is the fixed income market. As a bank, how do we position to provide people with the liquidity, given the fact I made that liquidity is now squeezed in the market? So if you have little liquidity, if you have good fixed income desk, what can you do to provide people with liquidity? In that process, you make some good fee income. Our trade business is impacted. How is it impacted? I'm talking of foreign trade. Somebody is operating with, for argument's sake, capital of 1 million cedis. By December, if we translated that 1 million cedis, maybe $150,000. By the time the imports come and he's selling, and he must change that money back into dollars, it's no longer $150,000, maybe 120, 110. What that does for a bank is that your customer is stretched. And so the potential for him to default on your repayment also goes up. And all these things, the good thing is that they are not lost on us. We are very much. So in our planning, in our ARCOs, in our business strategy meetings, these are the things we are very much aware of, and then making sure we navigate the terrain in a manner that we still support the economy, but not destroy shareholder capital. And so, in summary, what I will say is that don't worry about NPLs. It's firmly under control. That is my bullet point on the top right. It is firmly under control. That is my word to you. Again, we'll keep growing the balance sheet. But that growth, we are not going to do any wishy-washy growth, but qualitative growth. What I mean is growth that will come with the right returns. We are not just going to buy deposits to grow the balance sheet. If we have to go for an expensive money, there will be an expensive venture to take it. And so net, if the spread makes sense, we'll go for it. So we'll continue to play our role of being pivotal to the development of the economy, but in a measured, in a very wise manner, so that we don't destroy shareholders' value. I'm assuring you that you continue to see our cost-income ratio trend the way you saw it. How is that going to happen? Cost efficiency on one side, revenue enhancement on the other side, and our cost-income ratio will continue to trend downwards. And so to sum up, we'll do tweaks here and there to our strategy, but the key focal point of being highly digital, bringing value-added proposition to our customers, being relevant no matter what the times, we'll keep doing the right investment to remain there. Thank you for your time, and I'll support you.
Thank you very much. I'm sure we can give him another round of applause. So MD, Mr. Adumakoen, DMD, Mr. Afram, thank you so much for that elaborate presentation. I'm sure every area is covered. At this juncture, I also want to appreciate all our audience who are online. We have 154 people who are currently online. And there's a mix of fund managers, trustees, our brokers, our friends from the banking fraternity, investing public, researchers, academia. So it's a very good mix. I mean, we are actually reaching out to the right people. And I'm sure before COVID, 60 people here, but now because of technology, what COVID have pushed us to do, we have 154 people online, and then we also have some people here in person, which is very positive, and it also helps with our reach and exposure. We'll now go over to the Q&A session. So we'll have questions from our people who are in-house here, and they'll also take some questions online. And then Mr. Adumako and his team will be ready to take those questions. So the floor is now opened for questions. There's a gentleman who will pass the microphone around. So if you are ready, the media people. I'm being, okay, I should go on, okay. Okay, that's fine. So, yes, so, okay, so Nanekia from TV3 has a question. Yeah, you can speak. Let's hear your question.
Good morning to you, all protocol observed, if I should say. My name is Nanekia Mensah Brampa with TV3. And, okay. Hello, good morning once again. So, Mr. Afram, with your presentation, I like the final part of the assurance on the non-performing loans, the fact that you are 3% now, but are you not concerned that loan default will go up because of the rising interest rates? That's one I want to find out. And when you were in the middle of your presentation, you said that you gave the macroeconomy perspective and you were going to tell us how the bank is reacting to the economy. If you could elaborate further on that too. Thank you very much.
Mr. Afram, can you please kindly come over? Okay, so we'll take maybe 3. I think the questions, how many? About 2. Okay, so maybe we can do these 2, and then we'll be taking the questions in 3s.
Okay.
Kindly come to the podium because of how the cameras are set up.
Okay. Thank you, Nana Ekuya. On the question of rates going up and will my NPLs not increase? Let me give two perspectives. We have CD loans and we have dollar loans. For the dollar loans, by virtue of the CD depreciation, straight away the quantum increases. And so you get challenged where the client is not generating dollar flows. But the good thing is that most of those loans generate dollar flows. So the real question is on the side of where the flow is coming from. Because of the challenges we are confronted with, will the customer's business be impacted negatively? For which reason the flows will not come in? That becomes the main issue. Again, with the rates going up, we have a choice to make. So I've given a loan, let's say for argument's sake, it was 20%. At the time, the Ghana reference rate, maybe 14 or 13%. Today, the reference rate is in upwards of 16%. What does it mean? The bank has to make a choice. And so as we engage you as a client, because we know you, we know what your capacity can take. If in our honest assessment, you can absorb the rate hike, we'll increase the rate on your loan. If in our honest assessment, you cannot absorb an increase in the rate, we'll be cutting our noses to spite our face when we do increase the rate. In such a case, what will happen to the bank is that you have had an opportunity lost because you have the chance to increase the interest rate on your loan. But if you do increase, the other side of NPL is staring at you. And the moment the loan becomes non-performing, you cease to accrue or recognize the income, you suspend it, and then it gets impaired. So you get a double whammy. And so will I want to stay with my old rate of 20%, allow the customer, work with him to pay so that I can recognize that 20% and not impair the loan down there? That may be a wiser choice. So we'll do a case-by-case review of all the key customers, especially corporate and commercial, and see those there's opportunity to increase and still keep the loan performing, and those that if you do increase, you just be cutting your nose to spite your face. We'll avoid that. You were asking about the economic situation, how we are changing our business. A little bit of details will help. Because of where we find ourselves, one, we have seen a lot of workers complaining about their disposable incomes being ebbed away because of inflation. That gives opportunity for a bank to give them facilities. If we can put our model such that we are able to determine for the next year, if you give her extra days to cushion her for the temporary economic challenge we are going through, she will still be able to pay. That's an opportunity for me to give additional loan. And so I might have planned in my budget that construction sector, I'm allocating X amount of my capital in terms of loans. Because of the fiscal situation of the state, I will shift it. Which other sector has the opportunity to take that extra loan I will have given to the construction sector? So that is the kind of scenario analysis we run and say that shift the capital allocation from construction to say telecommunication. That is a sector growing. That's a sector still making the right investment. And so if I cannot do construction, maybe I can do financing of a telco, of their keepers. If that is the opportunity, yes. And so when I say that we'll still work at our numbers and achieve them, we are looking at the basket of the opportunities that have emerged and also the challenges that have come. And so we do a jigsaw of moving from one part and giving to the other part and still remain focused on the bigger agenda. That is what I meant by reacting to the macroeconomic situation. Thank you.
Thank you. I'm sure, please, you can still be here with us.
Yep.
So interestingly, now we have 217 people online. So it just tells us the kind of interest GCB is generating. This is very positive, 217 people online. And there are a lot of questions online as well. So I'll start with one from Erica Defoe. How does G-Money feature in your new strategic plan? And what is the likely impact of the passage and introduction of e-levy on your strategy, and specifically revenue going forward? So I'll take the next question. In your new strategic plan, and what is the likely impact of the passage and introduction of e-levy on your strategy, and specifically revenue going forward? So this from Eric Edifo. There's also a question from Ebenezer Sam. The GCB NPL looks very worrying, and the fact that 2 accounts contributed over 80% of the total NPL questions. The credit risk assessment approach of the bank. Can you let us know what is GCB doing to improve its credit risk assessment going into the future? So we'll add one more so that we can take all the 3. And the other one is from Felix Yabua Ohimen. He's asking, when are we getting our dividends and how much per share? Thank you.
I have my chief digital officer here, my DMD operations, who are directly responsible for the G-Money. It featured very much in our strategy, but I'll leave them to give the details. On the question of the impact of e-levy, yes, we checked the countries that introduced e-levy on Momo transactions. And we saw that, yes, initially there was a decline, but over time, things normalized. Can I avoid using Momo? Maybe temporary, but not on a long-term basis, because I'm here in Accra, I need to send money to my mom. The natural question I'll ask myself is trying to get the fiscal cash and the Momo, the cost of doing that, the risk involved of somebody running away with the money. Maybe I'll be better off paying the 1.5 and let my mom have the money. And so we expect some initial reaction of people trying to shy away, but you tend to see that over the long haul, you realize that is the best option. Because the risk, you say you go to the banking hall, you go to the ATM. What if, as you are stepping out, somebody confronts you and, hey, there's something wrong. But if I can use my phone and move money from my account and transfer and give to people, I think it's a better. And again, for us, I've considered that initial decline, but it will come back. I don't think it's going to be that significant because, of course, our strategic ambition. Ebenezer, on the question of NPL and credit risk assessment, I must assure you that, yes, there's always room for improvement. New things come, emerging sectors come up, emerging transactions come that require that you tweak things here and there. But I can assure you that at the time these 2 credits were done, they were done in the best risk-assessed way practicable. What compounded our challenge was the issue of COVID. If we are working with, say, a consultant or a designer who comes from the UK, and because your borders are closed, you sign contracts, 2018, 2019, and then suddenly 2020, the guy goes for Christmas, he cannot come back. In all of this, prices of items are going up. Time is running against you. That is what created this scenario for us. It wasn't about weaknesses in our credit underwriting processes, but the quantum of challenge that COVID presented. I'm sure those of us here or online who had relatives working in the hotel industry, they were asked to go home. And so if GCB Bank had financed a hotel that was doing very well, and suddenly because of COVID, no customer is coming, I'm not sure we can blame that one on the credit underwriting standards. And so this is what created this problem. And indeed, rightly pointed out, more than 80% of the NPL comes from that. The good thing is that we are very much aware, working with the promoters to bring these projects back to life. That is the most important aspect. For the history, there's nothing we can do. But the point is, how do we bring these projects back to life and get releases from our impairment that will enhance our profitability? That is where now our focus is. And Felix, on your question of dividend, we've published, we are going through the motions, and I'm sure you are very much aware of the motions. We are engaging our regulator and the relevant stakeholders to come up with a dividend that we can pay our shareholders for the good performance we show. And so just bear with us. Sooner than later, our invite for the AGM will come to you, and the dividend story will be told there. So let me hold it for now and be patient with me. It will come to you sooner than later. Thank you. Thank you. Thank you, MD, for bringing this up. You know, the point I made that when you take accounts in loss category from my NPLs, my NPL is 3%. What I meant for the attention of audience in ordinary language is that for those two facilities, they've been fully provisioned for. So in terms of their impact on our capital, that has been absorbed. I hope that's clear. So in terms of going forward, the focus is rather bringing them to life and then releasing the impairment provisions we've made against them. Let's focus on that one. Thank you. My colleagues, Mr. Lamte, and then will take the G money question. Okay.
Thank you very much. Good morning once again to all of us. I would first off start off with providing some statistics about G-Money. One, registered customers, we've seen the platform post 2 million customers. Last year, I think when we reported, we saw 1.4 million customers. As of now, we do have 2.2 million customers, registered customers on the G-Money platform. In terms of agent network, we have about 25,000 agents, registered agents on the G-Money for G-Money business. Last year, we saw 16,000. That's a significant growth that we've registered over the 1 year period. In terms of merchants, because there's a challenge that we had last year, we had about 10,000. Now this year we do record, as of the end of December, only 30,000 registered merchants on the G-Money platform. I'll share a few lights as to how, as a management team, we're running G-Money. G-Money, as of now, what we're doing is to grow viral. We want more customers on the platform in order to reinforce the positive network effect on the platform. So we do have customers transacting on the platform. Deposit retention remains within the bank. It gives us opportunity as well to earn non-interest revenue, call it fees. And then FX, we have products like remittances coming to the G-Money platform. So from a strategic perspective, what we are seeking to achieve now is to grow viral viral with a view to reinforce that positive network effects that will come through that. The second part of it has to do with operational resilience, and MD mentioned earlier on. Fraud is a very key thing when you talk about digitization or mobile banking. So yes, we've enhanced our fraud tool, anti-money laundering issues and all of that. We've covered that within the platform. It's a key focus area that will continue to strengthen. Then when it comes to technology is very, very critical to be able to support the new products that will bring on the platform. So there are three called strategic anchors or pillars that we run in G-Money on. One, to go viral. We have the agent base. We have the merchant to grow the merchant base. Now is to grow more viral in terms of customers. I think MTN has about 15 million. Other call it M-Pesa in other markets. We've seen large customer bases on their platforms. So this is where we are going to grow the customer base. Now, in terms of next steps, there's a lot of competition on the market. We believe strongly that we have the right, as MD has said, the people, we've got the technology supported to be able to scale and innovate faster than the competition. That is what gives us the right to win in this business. If not, you become very commoditized. What a platform A could do, perhaps you could also say, do it. But in our case, what we set out to do is to scale the level of innovation and innovate faster than the market, all having the interest of our customers in mind, to give them that convenience and speed in terms of service delivery. One unique thing, which I believe we all know about G-Money, is the fact that it's telco agnostic. Whatever you're on MTN or Vodafone or any other network, wherever you are in this country, you're able to access our services. And indeed, G-Money is not only for individual customers. We've extended the solution to a number of cocoa purchasing cocoa companies, buying companies, purchasing clerks, being able to push money onto the platform. And that is able to, we've digitized the whole chain, where previously you find purchasing clerks perhaps running with money, fraud and all of that. Now currently we could put the money on the platform and right through from the cocoa company to the purchasing clerk to the farmer in the village. The money, you could see the whole chain, the whole money being digitized in there without fiscal cash actually going on. So G-Money is not only for individual customers, also for corporate customers. And going forward, as we build this business, we'll be seeking to extend it to many other value chains, call it whether within the international NGO community where they do a lot of funds with people in rural areas and all of that. We would extend that functionality to other value chains. Now, in the midst of, we've seen issues like Ghana Pay. I'll call it new products like Ghana Pay coming on board. At GCB, what we do, at the end of everything, what we do is provide convenience. Any solution that will bring convenience to our clients, we would support our clients go on that journey. So specifically what I'm saying, that we'll be participating in the Ghana Pay platform, which is an industry-wide collaboration towards a mobile wallet. We will be participating on that. And the question somebody would ask is that, why do you have G-Money and have Ghana Pay? And what's the future of G-Money in that context? The way we see G-Money, or the way we run in G-Money as a management team, as a team at GCB, is that it plugs into what we say a broader ecosystem strategy. So G-Money is just one solution. So unique solutions, like I explained with the purchasing clerks and the cocoa business, will continue to be put onto the platform wherever our customers also need a solution. And Ghana Pay is exposed to a lot of, call it 12 million customers in the banking sector. We will contribute to that. We will participate in that, all having the interest and the needs of our customers at heart. And then we'll, on top of that, we'll continue to innovate and provide better solutions than the market. That is our hallmark, to get to a point where we'll innovate at scale and provide faster, better and faster solutions onto the platform. So in a nutshell, I'll say, yes, G-Money is well on course. It fits into our broader ecosystem strategy in terms of providing a solution that is unique to what the market already has. And then also I mentioned the issue about viral growth in customers. So I think in a nutshell, I'll summarize viral growth in customers, continued improvement of operational resilience, maintaining fraud, due diligence around agents and merchants will continue in there. And last but not the least, we'll continue to make the right investment to make sure that we have a robust technology that always supports the platform. Thank you very much.
Thank you very much, Mr. Untitled. So this program is also being watched live on GCB, Facebook and YouTube social platforms. We have someone in-house who has a question, so please go ahead with your question.
Okay. My
You
name
mentioned your name and where you're coming from.
Yeah, my name is Ebenezer Sabute from Joy FM. So two of my questions have been asked partly, but I would like to first one on the NPLs. I was coming to ask specific one on the one with the BDCs, because you know rising crude and all that, and I know you are exposed to the energy sector as well. So I was coming to ask what arrangement you have with them to ensure that you curtail the situation. That was one. And then secondly, on trade financing, with the coming up of the AFTA, I know some time ago you were trying to expand to some other West African countries. Yes, but I didn't hear much from either the MD's presentation or your presentation. I would like you to give us some updates on that. So thank you.
Good morning. Okay, good morning. My name is Morris with GTV. Should your customers expect a continuous rise in the cost of credit, given that inflation is going up, and that may inform the Bank of Ghana to further increase the policy rate, which then means that your lending rate may go up? Should your customers expect a continuous rise in the cost of credit?
Yeah, okay. Let me just make, no, you can go on. Let me just make one comment, some of the questions. I'm sure Mr. Fram will get into more detail. With regards to the expansion into West Africa and other African countries, yes, you are right. We have that agenda on our strategy. It is not expected to roll out this year. At the right time, I think we'll come to the market when all our due diligence and decisions have been made around that. But yes, given the fact that the AFCFTA is headquartered here, given the fact that we want to support Ghanaian industries and enterprise spread across not only West Africa, but the entire African continent, there is some value in GCB also having representation in other parts of the country and also the continent, not the country, but the continent actually. So we are looking very closely at that. There are many ways of doing it. We will use the most optimum way to return the highest value to our shareholders. And in due course, we will let the public know about our intentions in that area. Okay, so I'll leave that like this for now. So good.
Thank you, MD. Okay, so even the question of the BDCs, yes, we do have some BDCs on our portfolio, but very small number of BDCs. If you recall, in the early 2000s, right up to 2010, GCB was doing significantly all the transactions of TOR, and it came with a big challenge. So when the TOR situation was resolved, we completely went off BDCs. Recently, a few of them, a few. So in terms of portfolio size, it's very negligible. There's nothing.
I think you must emphasize that it's negligible in terms of non-performing loans.
Yeah.
Okay, the BDC business we have is good business, it's significant business, but in terms of non-performing loans, it's insignificant. We've structured it so well, it's worked perfect. Okay, so BDCs, you're still open to GCB. Thank you.
And then Morris, on the question of lending rates, I think a lot will depend on what happens going forward. We cannot be sure today whether the already outlined measures will lead to a change in the direction. Maybe there's always a lag effect. Inflation now at 19.4, the April reading, May reading may give a better picture of whether rates will continue to rise or otherwise. So for now, our customers should stay calm. If there is going to be any such development, we'll communicate accordingly. We won't surprise them. So remain calm and let's all hope and pray that things get better for all of us. The key is that if it gets beyond a certain level, no matter which bank you are, you have to increase. But we are not there yet. So we are seeing what the effect of the measures will be, whether it will curb the situation or whether it will even stop it. If we see stability, that will be good enough for us, as opposed to rising and continuous depreciation of the city. Thank you.
And let me also say that, look, we also worry. Myself, as the MD, I also worry about the fact that interest rates are rising, and we are concerned about the impact it has on our business. Okay, the more we increase interest rates, the more challenges we create for our business. Our businesses in this part of the world are very fragile. GCB is a bank that invests heavily in the SME space. Okay, we do a lot of heavy lifting in the SME space that many others may not do. So we are very sensitive and very careful about the way the interest rate dynamics work. We want to make sure we have a healthy portfolio. We want to support businesses on a sustainable basis. And so we are not in a hurry to knee-jerk and push interest rates up. But we have a business to run. We must return value to our shareholders. And so we need to take all of this into consideration. But I just want you to understand, we are not in a hurry to increase interest rates because we want to make money. In doing so, we will destroy all the value we have created. I hope you do understand. Thank you.
Thank you, Mr. Adomako. So there are 3 questions online. So the first one is from Kafui Klu. He said he's very happy with the presentation. He wants to, he said, can you kindly shed some light on specific sectors loans could be extended to, considering the high cost of funding and the sectors you shun from, the sectors you move away from because of high cost. Okay, so the other question too is from Kofi Chei. He's saying, I see the statement NPL is under control more of a political statement. What are the steps the bank is putting in place to keep the NPL under control? And they'll take the third one from Ebenezer Sam. So GCB has year on year had higher proportions of assets in investment securities. Are we likely to see a change in the asset management approach in the future? Thank you.
Yeah, thank you, Kafui. The question of specific sectors. What banks do is to evaluate the risk versus the return. That comes from lending. And so today, I cannot tell you this sector, GCB is completely shunning it, no. But then what we do on the go is to evaluate the risk in the sector and the return that comes from the sector. And so that will continuously do. I tell you, there are sectors today that are not even growing, but you see pockets of opportunities in there. And there are sectors today that are growing and buoyant, but there are pockets of significant risk you may not want to touch. And so we'll continuously do the risk return evaluation of every credit application that comes. It may be a sector, apart from, I think, arms that is not going to the state. Every sector, we are open to it. What we do is to evaluate the risk and returns in there and then make a decision. And then Kofi, as regards steps to the NPL. So one thing we've done, and I said in the presentation, was that we are proactive in downgrading these facilities because we saw immediately that the planned cash flow was not going to happen because of all the developments I spoke about. And so that step has been taken. And so if we're looking at a bank that was not proactive or was shying away from NPLs, would not have done that. And then two, getting closer to our customers, being in the journey with them. So the better you understand the customer, the better you structure your product to meet their needs. And when it's better structured, your chances of success with the performance of the facility is a lot better. If you don't know the customer so well, if you don't get closer, if you don't monitor, that is where we tend to have problems. And so these three things I've itemized, we are doing them religiously, for which reason I was confident in saying that we brought the NPL under control. The two big ones were the history, and then the going forward, the monitoring, even the underwriting, what we take, what we don't take, what return we are looking for what risk we are undertaking. All those things will inform what kind of NPL we bring onto ourselves.
And Kofi, just to explain this a little more, from what Socrates has said, no, NPLs are under control, and it's not a political statement. Just we have tightened our underwriting standards. It is more the bank engagement and involvement in due diligence today is much, much deeper than it was maybe 6 to 1 year ago. Okay. Also, you must ask some of our customers, and they will tell you, particularly the non-performing ones, we are collecting every cedi people owe us. Okay. It may not have been the culture in the past, but today, for all our NPL customers, we are going after them one by one, and we are indeed collecting. If you look at our recovery, what we did last year, it will give you some sense about what the GCB is seeking to do. Sure. And more importantly, we are also investing in our people. We are training and developing our people so that the underwriting credit skills are of international standard. So with these three things, you will soon find out that this is not a political statement. Thank you very much.
And the last question on asset allocation, that we have too much government securities on our portfolio. Let me concede that in terms of proportion of earning assets is the significant one. And two, is it that GCB is out there to say that we won't support the development of the economy? No. In fact, the reasons for GCB's existence is that of developing Ghana. That is what our forefathers had in view for setting up GCB Bank. And that is not lost on us. But the real challenge is, do you have a bankable project that we can invest in? If there's a bankable project we can invest in, GCB is more than happy. And for which reason those two significant accounts we invested in. And so the question is, if I don't want to support, I don't want to lend, I could have given those monies to government by buying government securities. But we gave it to private sector. We are where we are today, but we've not given up. We are working with them. So going forward, would that situation change? We'll keep evaluating. With the capital available to us, how do we allocate it based on risk and return? At the end of the day, we have to return something to our shareholders. That is what they expect of us. So there's no attempt to say that we won't do loans. No. Show us bankable projects. Convince us. We'll work with you. We get the project executed. But sometimes people just come to you, the project is not well thought through, just because, especially when government comes up with a program. See, all manner of people come in. You ask 1, 2, 3 questions. Realize that they've not even thought through what they want to do because they think, oh, government's program, let me just show this. When you do that, the bank cannot help you. But then if you've thought through the project, and we can see the end-to-end origination to the sale of the product, even if there are deficiencies in there. That is why the bank is there to help you fine-tune them. But the wishy-washy ones, unfortunately, we cannot support. We will continuously evaluate where we allocate our capital so that we don't destroy the bank as well. Thank you.
Also, again, to add to what my colleague has just said, the reason for which we set up GCB Capital and also our wholesale investment bank is also to help customers by providing technical capacity and also advisory services. Like Socrates said, government has brilliant initiatives. The challenges that the public and entrepreneurs have is the support and know-how, the capacity, the advisory work that has to be done, and that responsibility comes to banks like GCB. And that is how we intervene in moving this agenda forward. So we have to be nimble. Whether we continue to invest heavily in government or begin to put that money in private businesses, it's all about being nimble and adjusting to the market. But trust me, our first objective is to help Ghanaian entrepreneurs develop and grow their business and become champions in Ghana beyond. Thank you. I think my executive director has a few words to say.
Thank you very much, MD. I think a fantastic point we need to point out is that the amount of bonds you hold as a bank is not a sign of moving away from the economy. So what we do terribly well in GCB is that a good portion of the holdings we have, close to $1 billion, is used to secure other forms of borrowing. So for instance, we use that on the back to raise maybe dollar borrowing, which we use to fund other assets that we do. So the mere fact that you have a significant book in government security is not necessarily a bad thing. If you look at the growth in government securities since 2019, banks held about something close to 22 billion. Today, banks at the end of last year held something like 55 billion. So it's a function of the entire industry, and people are becoming cleverer and finding more useful ways of using your balance sheet in the non-traditional aspect. So it's actually something we should look to encourage as opposed to being afraid of. And I thought it was important to make.
Thank you very much. Do we still have some questions among the audience here? Okay.
Okay. I'm confused with the Ghana Stock Exchange. So GCB Capital, what is the target investors that you are looking at? Are you going public debt or are they private debts that you are targeting?
Thanks very much. It's an incredibly good question. What GCB Capital is set up to do is to look at a pension fund management business as well as an advisory business. The advisory business looks at debt advisory. We also, in some instances, look at equity as well. So there we cover a lot of client, but what you'd find that the dominant clients in the market in which we find ourselves tend to be government-based. So government debt transactions tend to be a significant portion. We have seen the need to help government restructure, and a number of our clients restructure specific debts that they have on their book, term it out, or find more innovative ways of addressing the stronghold of the debt on the balance sheet. So we've done quite some good work in the past. There's been also talk we saw through the government talking about SOEs needing help going into the future. That's another area we're looking at. A number of our clients who are growing also need some amount of help. We are also focusing our attention in that space. So we look at both private sector and public sector, but you'd find that government business tends to be the larger business in our economy, and is reflected also on the listings of securities on the stock exchange as well. Thank you.
Thank you. I think we don't have any more questions. both online and in person. So as we speak, we have about 244 people online. I think this is record breaking. We have never had such a high number of people online. So kudos to GCB and the team and everyone. 244 people online. Okay, so at this juncture, thanks to everyone for the questions and the comments. I'll now call on our Managing Director, Mr. Akwafezi, to give us his remarks. So MD, it's over to you. Okay, so before that, Mr. Adumako will give his closing remarks, and then MD will speak after him.
Okay, thank you. I'm very pleased and happy with the way the event has gone. I want to thank all of you. Like I was saying, I'm very pleased and happy about the way the event has gone. And thank you all for making time to come and share your ideas and also listen to what your bank for life, GCB, what we are doing. Like I said at the beginning, we are going through challenging times globally. Financial institutions are going through challenging times. We in Ghana and in GCB for that do believe that we will come out of this macroeconomic challenge in the not too distant. It's for banks and institutions who position themselves ahead of the good times. And your bank, GCB, has taken all the necessary steps to invest in technology, to invest in people, to invest in credit underwriting standards and processes, all in the interest of meeting our customers' expectations. So we will continue to do so. We expect our results to continue to soar. We expect to dominate this market because this market, we have the right to dominate, and we will dominate this market with support from you, our loyal customers, and all other stakeholders. On behalf of the management and board of GCB, I want to thank you all for coming to listen to us, and we look forward to engaging you again in such a similar event. Thank you, and God bless you.
Let me also say good afternoon to all. After listening to the last words of Mr. Kofi Adumako, I think I should just shelve my closing remarks so that what he said will sink in and sink in and sink in. Your bank for life, that's GCB. Okay. And they have every right to dominate. So we'll make you the king of the banks.
Yeah, don't make it, yeah.
I like those statements. Those are very bold statements. And also, let me first of all say a big thank you to Mr. Adumako and the team for excellent presentations that were done. We've known Socrates and the team for some time. And also the fact that the MD alluded the fact that they've not been here for some time, which is true. And this is the beginning. And they are going to be also coming to share their figures with you. That is audience listening, farm managers, trustees, brokers, etc. So that you begin to understand the facts behind the figures. And that is what this program is all about. So it's important that as we move forward, GCB will take advantage of this platform and be sharing information with your stakeholders, shareholders, etc. Today, we had a lot of explanations as to what you're doing, your mobile money, that is what G Money, over 2 million customers. I don't think so many people out there knew about it. But then this also gives you the platform to be able to carry the message across. So it's very important that you continue doing this. GCB is one of the most liquid stocks or shares on the stock exchange. GCB listed in 1996. That's about over 26 years ago. GCB has been very dominant on this market until recently when one other company joined. They were the most liquid, but as you speak, they still contribute about 6% of the turnover that we have on this market. That is how we measure the liquidity on this market. They contribute about 2%, 2.13% of the market capitalization of this market. That's the market value. So it is really a big company on the market. It's one of the most profitable listed companies, and I'm so proud of them because GCB is for Ghana, and Ghana is GCB. Unfortunately, you took away the Ghana and called it G. So maybe you have to bring the Ghana back to show that you're dominant. But don't worry about that. That's just by the side. But the important point is that GCB is one of the strongest listed companies on the market, providing a lot of liquidity on this market. And therefore, I was not surprised that when the financial controller, the deputy managing director in charge of finance was talking about the fact that the share price to him is not reflecting what's been happening in GCB. Today, what you did today is one of the things that you must be doing. You must let investors know what is happening to GCB. Pricing is based a lot on information you receive. Pricing is based a lot on what happens on the market itself. Pricing is based on the economy. Pricing is based on the political environment. So it's important that we all understand that stock markets normally reflect what happens to the country generally, especially the economy. So you can be doing so well, but maybe people are not interested in equity, and that is why you're not getting more trades. If there are no trades, you're not going to find prices moving. So what we intend to do as a nation in order to resolve some of these issues when it comes to share prices is to encourage more of the fact behind figures and also step up the educational program and explain to people why they must invest in equities even when the economy is not looking too great, because shares are long term. They're long term. You're not buying today because you want to make money tomorrow, unless you're speculating. The prices look good for that's what the analyst was saying, not me. So you can invest long term in shares, and it's been proven by all analysts, including my good friend Sam sitting here, that it's always better to buy equities in the long run than debt. You will surely make better returns in the long run. So don't worry too much, GCB. We'll make sure that we do a lot more education in terms of the general public, the shareholders, and also our own brokers, those who are putting up the prices, as to the importance of making sure that the financials or the company's results do reflect in the pricing. At the exchange level, like I said not long ago, the exchange reflects what happens in the economy and also especially looking forward. We've had, as we speak, the index getting negative by 3%, but then that's a composite index, but we've had the financial stocks index, that's where the banks are, going up by 3.5%. So it tells you the story that people still believe in the banks going forward. So what we have to do is also to make sure that we reach out to more people to look at the market as a whole. We've had trades going up by about 60% in terms of values traded in the equities market. We've had the bonds still doing well, going up by 5% from 72 billion last year to 76 as we speak. So we're not doing badly at all. What is interesting is that we've had transactions on both sides, that is when it comes to the equities and the bonds also going up. There are more transactions now. We've had the bond market seeing 77,000 transactions, now shooting up to over 164,000 transactions. So that tells you you're getting more investors out there. And the same applies to also the equities where we've had some more transactions are happening. Going forward as an exchange, we intend to do a few things. Today is GCB's day. So the press don't report about what I'm saying so much. Report about GCB's dominance. That's important. Going forward, we'll be introducing more products. There's one that we'll be introducing very soon. We've had the regulatory approvals for that. We'll be introducing the green market, where we encourage companies to start issuing green bonds. We've done the rules, it's been approved. So very soon we'll be launching that. But we'll continue with our visibility programs, do more education so that we can see the market also grow. Once again, let me thank my good friend Kofi Admarko and the team for the wonderful work done today. And we'll keep on encouraging you to pursue your 3 pillars. They're very simple to remember, simple to implement, and hopefully you get the results that you want. And we hope to see you again by half year, so that you can talk about this year's results, not 2021. Let me thank the audience also, especially those online. You said how many? 250 people? 250 people is the biggest audience we've ever had. And we have close to 30 other people also sitting here. So we thank you so much and have a wonderful day.
Thank you very much. We'll now take the closing prayer from Mrs. Isibuachi.
Let's pray. Father, we want to thank you for GCB. We want to thank you for the figures they have shown to us and the facts behind the figures. Lord, their ambition is to become dominant in the market space they operate. And this ambition is being supported by 3 pillars. That is the resource, the revenue growth and profitability, operational excellence, people talent. Lord, they can do none of this without your help. So therefore today, this morning, we ask for your help, that you will see them through these pillars that they have raised up to you. And we know that because we have raised it up to you, you are going to see them through successfully to the glory of your name. We pray that GCB shall continue to operate in the space as champions, because they are all over the nation, and you are going to keep them out there to continue to be the bank that they are, to serve the people. Father, we ask for wisdom, we ask for direction, and above all, we ask for protection. We ask that, Lord, you will take them through all this in the mighty name of our Lord Jesus. As they go back, Lord, go before them, clear their path, make every crooked way straight in the mighty name of our Lord Jesus, the Christ of God. We thank you because we have asked, we know you have done it already. So we say thank you, Lord, for answering our prayers. In Jesus' mighty name we've prayed. Amen.
Amen. Thanks to everyone for coming. Please, there are some lunch packs. So there are some lunch packs on the trading floor. You can pick yours and then and the rest of the senior executives can also pick theirs from our boardroom. Thank you.